Welcome to Momentum Monday. Today is May 18, 2025. Uh, just a few weeks ago, the market sentiment was pretty dark, and the talk was about a serious stagflation. And stagflation means low to negative growth, GDP growth plus high inflation, which is a very rare event. But nevertheless, due to the trade wars, the tariff wars, that was a possibility. And the market was reflecting that. Um, so we had a pretty significant quick pullback, which found support near the 2021 highs, like the previous bull market highs. And then a very quick V-shaped recovery as it became clear that um, those policies are not likely to last, and there will be some form of negotiation, and tariffs uh, are going to go down. And this is exactly what we've been seeing in the past couple of weeks. The price reacted first, and then the news that came after that kind of confirmed what price action was foretelling. In the latest one being that the previous weekend, the US and China agreed to cut rates uh, to for 90 days, so they can have enough time to negotiate and sign a new trade deal. The market like that. So we had a huge gap on Monday that followed through, and then we finished the rest of the week pretty strong. Um, I mean, obviously, most stocks have recovered pretty quickly, but one of the themes that is standing out is AI. Everyone knows how at the beginning of the year, the first few weeks of the year started very strong for AI stocks, and many of them made new highs. And then we had that DeepSeek news from China that led to a huge gap down and a significant drawdown correction in many AI related stocks. Many of them went down 50% or more. And now they've been recovering. All of them are back above their 200-day moving averages and setting up to potentially close that DeepSeek gap. And some of them have already done that. Like, for example, GV, which is an energy play, it's almost back to new all-time highs. And some of the other plays uh, some of the other main AI plays like VRT, setting up near its 200-day moving average. COS already above its 20 moving average, which is above the 50, above the 200. So it's in an uptrend and recovering from that significant drop. Some of the newer ones, TEM, um, positive reaction to earnings above this one, near 50 after their earnings, and sold some near 70, still holds. I'm still holding some of it. CoreWeave, another pure AI play. I mean, their earnings report was not spectacular. They even increased their guidance for CapEx spending, and yet the market wants to own new AI stocks, and CoreWeave just squeezed the short sellers and made new all-time highs. And I think like the European version of CoreWeave is NBIS, another one to keep an eye on that is acting constructively. Um, Other AI plays, Astera Labs ALAB back above its 200-day and starting to climb, and potentially might form a new base here near 100 and set up for a test of its all-time high near 150. MU has all the new data centers. AI data centers are going to need Micron technology chips, and MU is also setting up here near 100 for potential breakout. Crypto has been also super strong, with Bitcoin only 3% below its all-time highs. IBAT is, one of the ETFs that tracks Bitcoin, setting up here for a potential breakout after some sideways range contraction here. But Ethereum and Solana have also done strong, and here's one of the Ethereum's ETFs, ETHU, and here's the Solana SOLT, which is a 2x daily change. Both of them, have done substantial moves and are acting constructively, like the entire space is. There are quite a few other groups, quite a few other stocks that are acting constructively, breaking out, setting up. Cybersecurity is one of the areas that showed relative strength during the correction. Palantir is the undisputed leader, and they even missed earnings estimates here. Pulled back to their rising 20-day, where deep buyers immediately stepped up and sent it back to new all-time highs. This is a very strong price action. And ET, another one, had a substantial pullback during the correction, and is just as quickly as recovering. And I wouldn't be surprised if it tests its all-time, its 52-week highs soon. And Netflix, one of the strongest stocks during the correction, never really lost its 200-day, making new all-time highs. Spotify, another one setting up near its 52-week high here after a brief dip to its rising 20-day. Dash, also setting up here for a potential breakout near its all-time highs. And as you can see, all those stocks are just making higher lows, and setting up here for a potential breakout. This is a constructive price behavior. Dutch Bros, the same thing, never went below its 200-day. It's been making higher lows, and it broke out after earnings. So also wouldn't be surprised if we see this at new all-time highs in the next couple of months. So definitely constructive price action. And if anything, many stocks, many leaders are a bit extended. Even the indices are extended above their rising 50, rising 20-day moving average, which makes them vulnerable. If you chase them here, there could be a normal price reaction to the 20-day, which would be a significant pullback, but it would be normal. And if you chase names that are extended from their 20-day, it's very likely that you'll be shaken out of good names, or your risk to reward is not going to be great. And trading is all about getting great risk to reward ideas. On Friday after the close, the US debt rating was downgraded again by Moody's, and this is nothing new, as previously the other two big rating agencies, S&P and Fitch, they had already done so in the previous years. So nothing new, but yet the market sold off after the hours. I think it went down like 1.5%, the indices, and some of the momentum stocks more. So I think this might end up being a good buying opportunity because there's so many underinvested money managers, underinvested speculators that kind of missed a large part of that quick V-shaped recovery. So I think everyone would welcome a pullback to the rising 20-day, so they can position into better into the market. Um, so I don't really expect the dips to be very deep, just because there's just so much capital waiting to enter on dips. So that's all for me this week. See you next week.